Idea is about to go active on Bitcoin, guys. Just wait for it. If you have a pending order, that's fantastic. If not, you just execute by market. So today's, all right, idea is active officially. Today for the Sydney Open, we had that bullish break. Yo, what is good, family? Hope you are having an amazing day. As you saw in the clip in the beginning of the video, basically that was part of a private session with my group of students, and we were basically going over a breakdown for the New York Open. On that day, we took this specific bullish idea, and that was the live activation, so you guys could see how we reacted live and how we spoke about it very briefly. And now we're going to do the breakdown and how I specifically took it. Before anything, you have the link straight to my Instagram on the description of this video. You can be part of the private group of students with me and have that type of live analysis sessions with me daily in Spanish and English. So basically, let's go over this breakdown. Basically, as you saw in the first video in this channel, you saw the very particular way that I have to mark up the structure. Basically, no one else does it like that. It's basically pure OHLC, open, high, low, and close of the candles. And basically, that's a product of my experience of 7 years of trading experience, backtesting, and refinement after refinement after refinement. Basically, as you saw in the video, I have around 800 trades gathered on a bank of data live with Bitcoin with this specific strategy, giving a very solid result. And basically, this was one of multiple trades that we have with this system. So let's go over it. As you saw, we just look for one specific time window. All right, we can have multiple time windows. There are multiple time sessions on the market, but basically in this case we went over the New York Open. Look, not the New York Stocks Exchange, which is at 9:30 a.m. Eastern, which is 3:30 p.m. Madrid time. We were looking at the open of the New York session per se, which is 8 a.m. Eastern, which is 2 p.m. Madrid time. In this case, we trade the first hour, which is from 2 p.m. until 3 p.m. Madrid time. Then you do the conversion to your country. In that time window, we look for the first trade that is given with the system. That allows us to, play the probabilities of the model. And basically, we look for two models, either a bullish or bearish rule of the third impulse, or a bullish or bearish break of a structure. I think after all of these years of trading education in YouTube and ICT concepts and all of that, everyone knows what a BOS is. All right, market goes to the downside until some point market breaks the last lower high and goes bullish. Everyone knows what a bullish BOS is or a bearish BOS is. Fantastic. Now, what a rule of the third impulse is? I'm sure a lot of people trade a rule of the third impulse or even call it on a different way. That's fantastic also. All right, I'm not gonna get into a online war about the terminology of trading patterns, but basically a rule of the third impulse is pretty simple. On a new structure says that the third impulse is the one with the most probabilities to happen. After the third impulse is created, we can start to identify a trend line, and every single time the trend line is tapped, we accumulate liquidity and it becomes more obvious for then the market take all of that liquidity. Very simple. So when we have two impulses, it makes the third impulse very likely to happen. So obviously we can have a bullish BOS and then a second impulse to then get into a rule of the third impulse also. All right. So the point with this is the BOS is all clear. Now the rule of the third impulse, how do we take it? Because it's the S scenario with this idea. We will break it down right now in a second. But with a rule of the third impulse, we need a first impulse and the first pullback. Also a second impulse. Until this point, everything is clear. But take notes of this. For a rule of the third impulse to be valid, we need a second pullback. Obviously, we need to know that market is ready to then make the third impulse, because if the market is still going up, we cannot say that this is the third impulse because we don't have a second pullback. If this makes sense, just get the video back a little bit, a few seconds, and replay this part again because it's extremely important. Once we have the second pullback, we can then say, all right, let's get into the third impulse. Now, how do we do that? Very simple. let's go over this structure. Now, if you didn't see my first video, how I take the structure in consideration, go and check it, because like I said, it's a very particular way. You will see that practically no one else, literally. And in this scenario, we do it like this. This is 2 p.m. Let's mark that up. 2 p.m. New York Open. So I say always, all right, where are we coming from? That's my main question that I do myself. We're doing low, high, higher low, higher high. Fantastic. That's how we mark this up. First impulse, first pullback, second impulse, and now comes how to identify the second pullback. Look, I like to make trading simple. So simple that even a person that is focused to sell trading courses on Instagram can learn this strategy and resell the same strategy after a month. All right, if you're that person, congratulations, you came to your gold mine. All right, because this is so simple, man. Basically, the second pullback is going to be valid with one of multiple ways, but in this video I'm gonna gift you this first way, which is just a candle against. We are on a bullish trend. A black or a bearish candle is going to tell us, hey, the second pullback is already confirmed. So this is the second impulse. This is clear. Now the second pullback is created as soon as this candle closes bearish. Done. At this point, when this candle closes, I'm already thinking about getting into the bullish rule of the third impulse, because for me, that's valid already. Now, obviously, the second pullback extends itself until this point. That's fantastic, but I don't care about it. I care about this candle closing bearish, so I know that the third impulse is valid to be taken when the market breaks the high. So now we go with the next point. How do we execute? How do we take the idea, Charlie? Well, very simple. On a rule of the third impulse, let's put the bullish example, because now we are on a bullish idea. We are here, second pullback is confirmed. As simple as this, guys. I mean, this is as simple as you can identify this type of traits wherever you are, literally. With experience, you can identify this type of traits in a matter of 1 or 2 minutes. Believe me, with practice and a lot of backtesting, you will be able to do so. Buy stop at the higher high. That's how we take it, all right? Why? Because when the market breaks the second higher high, it's creating the third impulse, and we assume that the price will have enough volatility to potentially keep extending with the third impulse. Now, obviously, this is a drawing, this is textbook, but not every single scenario is gonna be like this, and I'm so happy that this first video is with this trade. So you guys see that not every single setup or winning setup is gonna be textbook. All right, a lot of times we will have ugly consolidations like this, but the model per se is, all right, entry on the third higher high, on the second higher high for the third impulse, assuming that price will have enough volatility to keep going up. That's it. Now, invalidation point at the low of the model, basically at the low of the first impulse. Fantastic. All right. Now, exit at the 1-to-1 risk to reward ratio. Beautiful, right? Exit at the 1-to-1 risk to reward ratio. Systematic, objective. It doesn't need any type of special indicator or any type of a special analysis. 1-to-1, boom, that's it. All right, you saw that on the first video, all the track record and all the bank of data that is gathered with this type of system. All right, obviously a 1-to-1 is not going to make you extremely successful in trading, but it's going to give you a very standard R every single month. It's going to make the portfolio grow. All right, and that's the good part about trading. All right, that it's not so complex and it still gives you a solid progress over time. So that's the way to enter. That's the way for the invalidation. That's the way for the exit. As simple as that. Now, like I said, I'm very happy for this setup to be like this and so ugly so you guys can see the reality. Right here, we surpass the second higher high. We create the third impulse, and that's when we assume that market will have enough strength to keep going up and hopefully go to your exit. But in this case, market is not with that strength. It needs a little bit more of time, and it starts to consolidate. It breaks the structure to the downside. It accumulates liquidity above highs, takes liquidity below lows, taps demand, accumulates liquidity below lows, and then it skyrockets. All of that, we do not care. If you're advanced and you have years of experience like me, 7 years of experience, then yes, you can analyze everything, go over the ins and outs and everything. But if you're new, you do not care about it. You have the invalidation, you have the exit, you do not care about anything else. You do your life, you do the rest of your day. What are you gonna do? Are you gonna stare at the candles for 2 hours straight for this trade? Bro, you don't have a break-even protocol, you don't have a taking partials protocol, you don't have nothing. You cannot just stare at the candles for nothing. That's wasting your time. Better to do back testing or go to some MMA session, all right? But not staring at the chart like this, all right? So you do the rest of your day. You execute, you put your invalidation, you put your exit, boom, that's it. No management, all right? So in this case, market consolidates, as you see. Normally, the trades last like 15, 30 minutes, maximum like 1 hour, 1 hour and a half. This trade lasts 2 hours, all right? So that's like a outstanding holding time. Once it did like 7 hours, all right? That was like the peak with this strategy. Obviously, I have other swing trading systems and so on and so forth, but with this type of strategy, it's an scalping more likely an intraday system. It never surpasses the trading day. So that's the good part. No management for the trades, intraday strategy, gives you the freedom to also do the rest of your day. That's the best part about it. So that's basically how we take in consideration the structural points, how we execute, how we put the invalidation and the exit, and management equals to no management. Eventually, market is skyrocketed and gave us the exit. So with this being said, family, on the description of this video, you have the link to my Instagram. You can talk to me, to my DMs, ask information about the private group of my students so you can get in and analyze the market live with me every single day in Spanish and English. And over there, you will be able to have these type of ideas live with me, see how I take them, see how I manage them, and ask me questions live, not only on a 10 minutes video right here on YouTube. So with this being said, family, see you in the next one. Let's go.